Good morning or good afternoon for all of the students. Today we have discussed about the chapter 2. Topic is about the development and classification of international accounting. The first one, I would like to explain about the learning objective of this topic. So there is 4 goals for the students. The first one, uh, for the student are expected to be able to understand and analyze the factor that have a significant effect on accounting development in the world. And second is that the student are expected to be able to understand and identify the dimension of a grace accounting value and Hofstede cultural dimensions. And three, students are expected to be able to understand and identify the influence of state cultural dimension in the tax system. And the fourth is understand and identify problems that arise in international accounting differences. Okay, the first one is about the differences accounting in the world. So differences in accounting around the world has an impact on the need for the classifications on the development of accounting in the world. Why do we need to classify national or regional financial accounting system? Because the classification is the understanding and the fundamental analysis of why and how national accounting system is differ. So we can also analyze whether the system is converging or diverging. Yeah. And the purpose of the classification is to classify countries, yeah, based on the specific characteristic related to the financial accounting system of the countries. So classification is reveals the fundamentals structure of group member that have in common and that differentiated one group from the others. So classification, I think, is the way to looking the word, looking what is differences about the one country with the other country, or what is the similar uh, one country with the other. So classification also have practical benefit. The first one is a country in a special group often react the new circumstance or changes in the same way. So countries may benefit from the experience of the other country in the same group. For example, standard setter in Australia, Canada, New Zealand, UK, and the United States are countries that can work together. Yeah, they can work together and find a general solution effectively and efficiently related to specific accounting issues. So, for example, because I think the country, yeah, Australia, Canada, New Zealand, UK, and the United States, that is a developed country, so they have the same characteristics. So I think that when they together can work together to find about the general solutions about the specific accounting issue. So I think this is they have react the same way. And the second is differences between group or differences between group are an obstacle to regional and worldwide harmonizations. So for the harmonization to be successful, there is involving of the members. Yeah, I think the involving of the member is the important to how the harmonization can be successful, such as the International Accounting Standard Board of the international level and the European Union at the regional level must understand the differences to address the differences and whether the pattern of the accounting development change over time. So I think this is the second benefit uh, of the classification of the country. And the third, developing country usually have a gap in the term of resources to develop their accounting standard, because I think for developing countries there is limitations for the resources, human resources, or maybe the other resources to develop, to develop high quality standard. So I think for developing countries, they have a gap in terms of resource to develop their accounting standard. So maybe this country may develop their standard if they are already standard in other countries regulating. So it's mean that for developing country, maybe they have adopt and maybe make some revises with their conditions. So I think developing countries is have a advantage if the other country have already new standards. And then communication problem are getting worse when the company financial statement to its user are unfamiliar with the company home country accounting standards. Yeah, so this is because there is a multinational company. So I think the communication problem is some of the problems. Yeah, for the when they make some financial statement. Yeah. So this has the effect of companies needing to present additional information to users. So because there is a differences of standard between a country, so I think the company must make some additional information about the information of the financial statement. Yeah, so they must make some additional additional information to users. The same problem can arise regarding international communication in multinational companies. Yeah, maybe accountant communicating company report in other country must use the same language. Yeah, I think this is the challenges of the accountant know now, because they have challenging to make how to communicate company report in the other country, because they must have the same language. So the part one, we have discussed about development of international accounting. So the first one we have discussed, there are 8 factors according to Choi and Mack that significantly influence accounting development. The first one is a financial resources. Second is a legal system. Third is a taxation. 4 is political and economic relations. 5th, inflation. 6 is economic development. 7 is a level of education, and 8 level of the culture. The first one we have discussed about the financial resources. In countries with a strong capital market, such as the United States and the United Kingdom, the focus of accounting is on how well management is running of the company. So how do the company obtain the profitability, and helping investor to assess the company future cash flow that are associated with the risk. So for this country, I think disclosure is an important or essential requirement for the company with the public ownership orientation, such as the United States and the United Kingdom, because they have strong of the capital market. Conversely, for the credit-based countries, where banking is the main source of the finance, so the focus of accounting is to protect the interest of the creditor through more conservative accounting measures. So for if the country is the main source is from banking, so the the focus of the accounting is to protect the interest of creditor. So it's mean that the accounting system is more conservative than the other countries that based on the capital market. Because financial institution have a direct access to the various kind of the information they want. So disclosure to the public is insignificant consideration. So for the country that have focusing in the banking resources, for example, is Japan and Switzerland, example of the countries that provide the protection to the creditors. Yeah. Okay, the second one, the information about the legal system. Yeah. So the legal system is determine how individuals and the institutions interact. Yeah. So there are two legal orientation in Western countries that we can. The first one is civil law, or company code. And then the second one is a common law. Yeah. So there is a code law and common law. Code law is comes from the Roman law and code Napoleon. So in the code law based country, the law include all requirement and procedure. So codification of accounting standard and procedure is natural and precise. Thus, in the code law countries, accounting regulations are incorporated into the national law and tend to be highly determinative and procedural. Yeah, so in the code law, accounting regulation are incorporated into the national law and tend to be the highly determinative and the procedural. In contrast, for the common law, is develop their law on case-by-case basis without trying to cover all of the case, because they have developed the law based on the case-by-case, not basis to cover all of the case. This has an impact. The law remain, but they tend to be less detailed and more flexible than the code law system. So common law comes from England, and in most common law country, accounting rules are established by the private sector professional organizations. This allows the organization to make its accounting standard more attractive and innovative. So it means that for the code law system, yeah, the code law system is a more the common law system is a more flexible and to be less detailed. Yeah, this is the explanation about the legal system. The third one is taxations. In the same country, the effectiveness of the tax regulation is determined by the accounting standard, because company must record revenue and expenses to determine the amount of the tax. For example, Germany and Sweden. In other countries, such as Netherlands, financial accounting and tax accounting are separate things. So there is a differences about the accounting standards and the tax regulations. Yeah. So taxable income is a financial accounting profit must adjust it for differences in tax law. Of course, although the financial and tax accounting separate, tax law sometimes require some application of certain accounting principles. So I think it is the same for the Indonesia. There we have a differences about the accounting standards and the taxation regulation. So when we have a report we report to for the taxation, we must some adjustment. Yeah, we must adjustment. So this is the differences about the maybe some other countries have accounting standard and taxation have a same rules, but maybe the other country taxations and accounting standard are different things. Yeah, different things because they have a different regulations. Fourth is about the politic and economic relations. Accounting and technology ideas can be transferred through the power struggle of the other country and trade between the country. So double entry bookkeeping was but the system about the accounting, yeah, in the Italy and gradually expanding in Europe. The British colonial applied accounting concept to the colonial countries. The occupation of the German state during the World War II led France to adopt the plan compatible. Yeah. So the United States imposed the accounting regulation of Japan after World War II, and some countries with developing economic use accounting system developed by other countries either because it was imposed on them, for example, India, or because their own their own choice. Yeah, for example, Western European country developed their accounting system after European Union regulation. So for the political and economic relation, because we have maybe some there is the colonial relationship. For example, maybe Indonesia have a colonial relationship with the Netherlands. So when Indonesia, the first time to make some regulations about the accounting, they maybe have the same regulations with the Netherlands. And then the fifth is inflation. Inflation distorts about the historical cost accounting, has an impact on the tendency to introduce standard price change into the accounting system. For example, Israel, Mexico, and several countries in South America use general price level accounting because of their experience of hyperinflation. So in the late in 1970, in the response to high inflation rate, both the United States and Britain try to report the effect of the price change. So it means that if the country have sensitive with the inflation, so the country must have accounting standard about the inflations. Yeah, because they must regulate how about to report the some transaction if there is the inflation. So for the country that have hyperinflation, they must make some standard that regulate about the inflations. Six, that is about the level of economic development. This factor influence the type of a business transaction used and determine which are more common. The type of transaction, on the other hand, determine the accounting problem to be faced. For example, stock-based executive compensation or asset securitization. So several industrial economy are becoming service economy. So in this information about the economic development, for example, the accounting issues such as the valuation of the fixed asset and recording the depreciation become relevant in the manufacturing. Yeah, becomes less important. For the example, current accounting challenges such as valuation tangible asset and human resources are growing. So it means that there is some changes about the economic development. Maybe for the country that have issue of the valuation of fixed asset because they have they focusing on the fixed asset. So I think the valuation of fixed asset is more important with the other information of the standard. So the 7 is about the education level. Yeah, accounting standard and good accounting practices will be useful. Accounting standard and good accounting practices will be useless if they are not easy to understand or cannot be used. For example, complex technical report regarding the variance of cost behavior will be of no use unless the reader is able to understand cost accounting. So disclosure about the risk of derivative securities are not informative unless they have the competence to analyze the risk of the derivative security. So I think the level of education is more important to understand, to understand about the regulation that accounting profession is made. So the last is about the culture. Yeah, the culture is the value and the attitude that develop in the environment or society. Cultural variable underlie the institutional arrangement of the country. So next we have a discuss about the specifically in the level of the culture. And then the second of development international accounting is by Dobnik and Pereira. But if Choi and Mac classify into 8, but for Dobnik and Pereira is more simple. There are 5: the legal system, taxation, financing provider. I think financing provider is same with the financial resources, and then inflation and the political and economic forms. So I think this is the explanations of the item is same with the Choi and Mac. Yeah, so I think I not explain more because there is a similar, similar with the Choi and Mac. Okay. Next, we discuss about the accounting value dimension, and then accounting value dimension of Gray, and the cultural dimension by Hofstede. The first one is about we discuss about the accounting value dimension by Gray in 1988. The first one is about the professionalism and statutory versus statutory control. Yeah. So this this value is reflect of preferences for judgment based on the individual professionalism and the professionalism of self-regulation as opposed to adheres to prospective legal requirement. So it means that for the professionalism, there is the individual is have the attitude of the professionalism. So I think there is the regulations. I think the regulation not complex because the individual have a professionalism. But in the statutory control, they must be regulate, because they have no the professionalism value. And the second one is uniformity versus flexibility. This value reflects the preferences for the use of the same accounting practice between firms and for the consistency of accounting practice over time, and is contrary the value of the flexibility that adapt the condition faced by the individual firms. So for the country that have a value uniformity, the accounting standard is more simple than the flexibility. So because the flexibility is they must make regulations adapt to the condition faced by the individual firm. So because they have a value flexibility and the environment always changes, so they must make some regulation based on the changes of the environment. So for the uniformity is the standard is more simple, but in the flexibility, the standard is more complex. The third is about the conservatism and optimism. This value reflect preferences for the cautious approach to measurement that allow one to deal with the uncertainty future event as opposite to more optimistic. So the conservative is that is the conservative way that you have the value that reflect preferences for the cautious approach that allow one of to deal with the uncertainty. But the optimism is contrary with the conservatism. So fourth is secrecy and transparency. Yeah. This value reflect the preferences for the confidentiality and disclosure of information about the business only to those with a close relationship with the management and the financing. As opposite, that is transparent, yeah, open approach that emphasis of the responsibility to the public. So I think for the secrecy, the standard is simple, and the transparency, the standard is more complex because they have the emphasis of the transparency is responsibility to the public. And then we have a discuss about the cultural dimension of the Hofstede. There is four categorized. The first one is individualism versus collectivism. The second is a large versus small power distance. Third is a strong versus weak uncertainty avoidance. And the fourth is masculinity versus femininity. The first one is about the individualism versus collectivism. So individualism is preferences for the looser social framework in which individuals are responsible for themselves and their families. In contrast, collectivism is preferences for the stricter of social framework in which individuals are accountable to their groups. So the individualism is they have a view that the individual are responsible for themselves and their families, but the collectivism is the preferences, the responsibility for their groups. And the second one is about the large versus the small power distance. So the power distance is the extent to which member of society accept that the idea that power in institution and organization is unequally, unequally distributed. Yeah. This affect the behavior of the less powerful, as well as the stronger member of the community. The people in the less power distant society receive a hierarchical order where everyone didn't need any further justification. But people in a small power distant society strive for an even distribution of power and to justify power injustice. So it means that the large power, in the large power distance is that the more equity, and the small power distance is less equity. And the third, we discuss about the strong versus weak uncertainty. Uncertainty avoidance is a degree to which member of the public feel uncomfortable with the uncertainty and ambiguity. Strong uncertainty avoidance maintain rigid law for the belief and behavior and intolerant people who have deviant ideas. Yeah, that is the strong uncertainty avoidance. But in the weak uncertainty avoidance has a more relaxed environment, and distortion can be tolerated. So I think if there is a distortion in the weak uncertainty avoidance, they can accept that. And the fourth is about the masculinity and the femininity. Yeah, masculinity is a preferences in the society for achievement, act like heroes, assertiveness, and the material of the successfully. In contrast, femininity preferences is society for the relationship, politeness, and caring for the weak and quality of the life. So this is a differences of the culture dimension in masculinity. In the masculinity, achievement is the goals, but in the femininity, quality of life is the goals. Yeah. So this is a differences about the masculinity and femininity. Okay, next one that we have discussed about the result about uh, the influence of the culture on the taxation system. So Richardson in 2007 examined Hofstede and Gray cultural framework for developing a theoretical model of the influence in the culture in the tax system. So in the Richardson 2007, used the concept of four Hofstede cultural, that is individualism, power distance, uncertainty avoidance, and masculinity, and for the tax system. So I think I will explain about the tax system and the tax system because for the four state culture I have explained before. Yeah. So I have discussed about the tax system. Yeah, the tax system there is four classifications. The first one is equity. The second one is simplicity. The third is naturality, and fourth is visibility. Yeah. The first one is about the equity. Yeah. Equity is a preference for fair and equitable tax system with respect to distribution of the tax burden among the people based on their ability to pay. That is the concept of the equity. The second one is simplicity. Yeah. Simplicity preference for the tax law that is not complicated in the tax system, so that this application is clear and predictable. And for the concept of naturality, yeah, the naturality is preferences of for the tax system. Yeah, does not have a major effect of private sector decisions and does not greatly distort. And then the visibility is a preferences for the transparent and publicly accountable tax system that reveals the true size and imposition of the tax on the individuals. Yeah, this is the information about the equity, simplicity, neutrality, and visibility. So the research result, yeah, for the research result, uh, this is the research result. So I think we must discuss about the information. Yeah, you must give some explanations. Yeah, why the individualism is more equity than collectivism. Yeah. So for the large versus small power distance, the large is less equity, small is more equity. Strong have less equity, and for the weak uncertainty avoidance is more equity, and so on. I think you must read the book, and then you have make some discussion why the reason, the reason why in the individualism is a more equity and collectivism is a less equity. Yeah. Okay, and then the last is about the problem due to accounting differences. The first one is about the preparation of consolidated financial statement, because I think it's not easy to the multinational company to make some consolidated finance statement. And the second is about the access to foreign capital market, because every foreign capital market in the other country have a different requirement or different regulations. And the third is about the comparison of the financial statement, because they have a different standard. So I think we cannot compare the financial statement if the standard is a difference. And fourth is about the lack of high quality accounting information, because some country maybe have a developed country, so they have a high quality standard, and maybe the other country has a developing country, so they maybe a lack of the human resources to make some high quality standards. Yeah. I think that's all enough about my explanations about the chapter 2. Hopefully, you have some information of understand what I explained. Okay, thank you and good morning or good afternoon.